Hi guys, welcome to the Simplify LLC channel. In this video, we will talk about choosing between an LLC or a corporation. Now, if you are new here, don't forget to subscribe and press the bell icon to be notified when a new video appears. Let's dive right in. So you're researching business entities and trying to figure out if you should choose to operate your business as an LLC or a corporation. While you may have started your business as a sole proprietorship or partnership, you may now want to switch to an LLC or corporation. So let's compare and contrast them and learn the benefits of each. Both must register with the state you choose to register in and must follow local and federal laws. But there are some differences between the two. Both LLCs and corporations offer protection of personal assets. These entities also seem more credible, which helps businesses raise funds. All right, let's get started with an LLC. A limited liability company is a structure that offers liability protection to every owner in the company. With an LLC, your personal assets may be protected from lawsuits and debt collection efforts for the business. There is no corporate tax applied to an LLC. Whilst you have to register your LLC with the state, your LLC faces fewer regulations and filing requirements than a corporation would. You may even save money on filing fees. Here's the benefits of forming an LLC. The benefits of forming an LLC include, as mentioned before, protection of personal assets and liability for business debts. Pass-through taxation, so no double income taxes. Lower annual maintenance. Multi-ownership. And you can maintain a personal stack instead of sharing ownership with shareholders. Surprisingly, some big names operate as or have divisions that operate as LLCs, like Amazon, Google, Pepsi, Nike, and eBay. We have a more detailed video about what is an LLC with its advantages and disadvantages. I will leave the link in the description box down below. So next we have corporations. These business entities must file documents with their state of incorporation following requirements designated by the laws of that state. A corporation is a distinct entity from the owner or owners of the business, so owners may be protected from personal liability for business debts. But a corporation is owned by shareholders. There are more requirements for a corporation to follow, and they are taxed differently than an LLC. Corporations fall under three classifications for tax purposes. C Corporation. C Corps are the most common and default tax status for corporations. They are taxed at the corporate tax rate for federal and state taxes. S Corporation. S Corps allow your corporation to be treated as a pass-through tax entity for tax purposes, but you must meet some requirements. B Corporation. B Corps are certified by B Lab and provide positive benefits to employees, the community, or the environment, but they are not recognized in each state. All right, certain circumstances may make it prudent to form a corporation. You can attract more outside investors by issuing stocks. You can decide to transfer ownership to someone else, like appointing a CEO. You can transfer shares to help you retain employees and investors. Or you can choose to set up an advanced management structure like a board of directors. Some popular companies that are corporations include Apple, Microsoft, Toyota, and Tesla. So LLCs and corporations both offer liability protection. So what are the differences? Let's start with ownership. LLCs offer more flexibility when assigning ownership and controlling stakes in the business. In a corporation, there are shareholders and some may not have a role in the business. They simply invest in companies for a share of ownership. The operating agreement will determine the percentage in ownership based on capital contributions and their role. The most significant difference between a corporation and an LLC is that each LLC member's interest is correlated to their financial contribution. So, you ready to form an LLC? Well, you will have to form it following state requirements, usually set by the Secretary of State. You would select your business name, file your articles of organization, and pay the required fees. If you have several owners or employees, you will also get your EIN. You would then prepare and sign an operating agreement. We have also an explanation video about how to form an LLC with all the steps we need to follow for it. Find the link in the description below. Do you want to form a corporation instead? The state you'll incorporate will mandate the rules, but usually it requires filing your formation documents, including the articles of organization, with the Secretary of State. You would pay the necessary fees, register your business name, establish a board of directors, and prepare bylaws. If your business is publicly traded, you will also register your stocks. Let's talk taxation. If you form an LLC, your income or profits will be reported on the member's personal income tax return. If you create a corporation, your business will be taxed at the corporate level at the federal and state levels. Payroll taxes are also withheld from anyone who receives income from the company through the year. Remember that as a corporation, your business would pay half of their employees' Social Security and Medicare taxes. Profits of corporations are also double taxed on the income received and on the dividends issued to shareholders. Now that your business is set up, how will it be maintained? When you have an LLC or corporation, each year you will have to file an annual or biannual report with the state, pay filing fees, franchise taxes, and taxes at the federal, state, and local levels. Management is different for each. LLC operating agreements will detail the company management. If you are the only member or owner, you don't have to complete an operating agreement unless you hire managers. A board of directors manages corporations, which is made up of shareholders. Annual shareholder meetings must be held and annual reports must be filed. Profits are distributed as per the operating agreement among all owners in an LLC. Corporations will also distribute profits to the owners, the shareholders, in proportion to the stock interest they hold. So, to sum up, both the LLC and corporation offer limited liability protection. LLCs are easier to form and taxation is simple. Corporations are more formal and can raise funds easier, but there are more compliance requirements. Well, that's it for today. Thanks for watching. If you want to know more about LLC or sole proprietorships, we have a dedicated playlist for each of them, and you'll find the link to those playlists in the description box below. Also, don't forget to like and subscribe. Feel free to write in the comments if you have any further questions, and we will see you next time.